India News Center, I'm Sonal Bhutra and you're watching Power Breakfast. It's a Friday, we have a lot to catch up on, but first up, as always, let's take a look at what the Asian markets are doing. They are in a wait-and-watch mode, needed more clarifications as far as the Chinese COVID policy is concerned. There were reports that it has been eased, but there is no final clarification on the same. Hang Seng absolutely flat with some positive bias. We have Taiwanese index, which is lower in trade today. And across the Asian markets, it's a mixed picture, so to say. Nikkei is down 2%, so that's a big fall that the Japanese market is seeing. Kospi2 is down 1%. So barring Hang Seng, which is very flat, most of the Asian markets are in the red today. And as a result of this, the SGX Nifty is indicating a sharp fall from the top. It's a 64-point downtick that the SGX Nifty is indicating, still above that 18,900 mark as per the rates there. But we'll have to see, because yesterday we closed at that 18,812 mark. So let's see which way things go from here. In the US markets, Wall Street ended Thursday's trading session mixed ahead of the crucial November jobs report. The Dow Jones ended nearly 200 points lower, the S&P 500 closed flat, and the Nasdaq Composite was up 14 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets ending the day mixed, with only the Nasdaq eking out a small gain. That comes ahead of tomorrow's big November employment report from the Labor Department. The Dow ending the day down about 0.5%. The S&P just edging below the even mark, closing down less than 0.1%, while the Nasdaq finished up 1.3%. The central bank, meantime, just can't stop making headlines, this time coming out of Chicago. The Chicago Fed naming Austin Goolsbee as its next president in a surprise announcement today. Goolsbee, a professor at the University of Chicago's Booth School of Business, will replace Charles Evans at a crucial time for monetary policy. Goolsbee has recently indicated that slower inflation may not be enough for the Fed to moderate its interest rate hikes. That's the action from the U.S. market. Now back to you in Mumbai.
All right, that's all the update from the U.S. markets. It's time to listen into Mohammed Al-Arian, Chief Economic Advisor at Alliance, to get his take on the markets, inflation, and the jobs data report that is due today.
If you take the data as a whole, one is that inflation is coming down, and two is that the real economy continues to do well. So this will just feed a growing narrative in the marketplace, which was given a major turbocharge by what the Fed chair said yesterday. The market did not hear his balanced remarks, and they were balanced. They just heard four things in particular, and off we went to the races, and we will continue to do so unless we get a really bad, a really strong employment number tomorrow or have some exogenous shock. I am in the camp that inflation will continue to go down. I do think that by the middle of next year, we're going to be having a very serious discussion about what do you do when inflation is sticky at 3 to 4%. Do you drive the economy lower in order to get to 2% or not? But we will see inflation going down. So the marketplace is saying inflation risk is over. The market isn't focusing yet on credit and earnings risk. And that is because, as Steve rightly said, there's no sign of a recession. For now, the coast is supportive of risk assets going higher. If you look beyond the next few days and weeks, there are some great uncertainties, and we are yet to get enough information one way or the other. So this market is a market that's very attractive to tactical players. It's much tougher to long-term investors. I'm not in the camp of 100% recession. I think the risk is uncomfortably high, but we can avoid it.
Okay, inflation remains too much high is the word coming in there. Let's also listen into Gabriela Santos of JP Morgan Asset Management on key sectors to watch out for in the market at this juncture.
We've seen a massive re-rating across asset classes, broadly speaking. So we're feeling, just in general, much more optimistic about returns over the next 10, 15 years. In terms of tech specifically, I think one of the carryovers from this year is going to be the return to positive real rates and the end of acronym investing. So it's going back much more to us to overlaying in each sector we invest in, both the quality and the value factor. So within tech, we see plenty of optimism, especially still for business tech related stocks where we have growth at a reasonable price. So we are seeing opportunities within semis, within software, within cyber, within cloud computing. It's just overlaying those quality and value factors going forward.
Okay, with that, it's time for the final update from our global market wrap this Friday morning. Mixed cues from Europe as well, with the French CAC up 15 points, the German DAX over 90 points higher, the British FTSE closing 14 points lower, S&P Global's final manufacturing PMI or the manufacturing index for the Eurozone rose to 47.1 in November from 46.4 in October. So that's the data which hinted that, yes, there is some downturn that we are seeing, and it is slowing off the region's factory activity downturn. Now, if we talk about the British factory activity, which edged up to 46.5 in November from a 2.5-year low of 46.2 hit in October. However, the outlook remains bleak, with confidence among British manufacturers falling to its lowest level since April 2020. Okay, those are the updates coming in from the global markets, but how will these cues impact our own markets? We have a research team joining in to tell you just that. The market setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you, and it's a Friday. So Vivek, let me come across to you first. What is the market setup looking like today?
Well, good morning. What we are looking at in today's trading session is the fact that we're actually getting very mixed, subdued cues as far as global indices are concerned. Like you mentioned, most of the US markets and mixed, and in fact, even European markets and mixed without giving any clear direction. Some important data expected as far as the US markets are concerned as well. But coming closer to the commodity markets, gold prices actually shot up significantly yesterday, up almost 2% in yesterday's trading session, and this was on the back of the fact that the risk-on rally continued as the dollar index continued its decline. Crude prices also gained in yesterday's trading session. This was on the back of the fact that crude supplies continue to tighten, and also there are hopes building as far as the crude market is concerned that China demand could come back as the COVID restrictions ease over there. But coming closer to the Indian markets yesterday did see a bit of a cool off from the record highs. We continue to trade near record highs, but in yesterday's trading session we did see that the mid cap and the broader end of the markets continued to outperform. Some important events to watch out for today: Inox Wind as well as Inox Green Energy. Remember, Inox Green Energy is recently listed, so they'll be coming out with their results. Unipart's IPO from the primary market has seen a healthy subscription, over 2 times subscribed. And also, when you're talking about some of the important events to keep an eye out for, yesterday mid-cap IT was one that continued to outperform, and a lot of stocks there saw a significant surge in yesterday's trading session, so that will be one pocket to keep an eye out for. Asian markets are mixed, and SGX Nifty is indicating a minor gap down open for the Indian markets.
Okay, all right, Vivek, thank you so much for that. So a minor downtick for Indian markets today, but Surbhi is joining us now. She'll talk about all the stocks that are in focus today. Surbhi?
Hi, thanks for that. A couple of stocks on my radar this morning. Few auto names on the back of their monthly sales numbers. The first one is Hero MotoCorp, where the total sales were up 12% at 3.9 lakh units, but the exports were down 46% on a year-on-year basis. Next is Eicher Motors, where the total sales were up 37% at 70,766 units. Next is NMDC, where the production for the month was at 3.61 metric tons and sales were at 3.04 metric tons. Also, the government is looking to exit NMDC's Naganar steel plant through strategic sale. It invites to sell 51% stake, while 10% will be offered to NMDC. Next is manganese ore, where the production for the month was 1.2 lakh tons, which was up 60% on a month-on-month basis, and sales were up 82% on a month-on-month basis. PB Fintech sources say that the SoftBank is looking to offload half of its stake through a block deal today. And lastly, Yes Bank, where RBI approves Carlyle and Advin's stake sale in the bank.
Okay, Surbhi, thank you so much for that. All those stocks in focus today. Finally, let me go across to Manglam, joining in with all the cues from the F&O space this morning. Hey, Manglam.
Good morning. So, the SGX Nifty, to start things off, is indicating that we may be on a bit of a back foot, but that should be good primarily because all dips are being bought into our markets. So, the last 8 trading sessions, the Nifty is, closed in the green, and there is strong momentum. However, it'll be important to see what happens in today's trading session, primarily because the FIIs yesterday ended up selling about 1,600 crores in cash market. The DIIs went up and bought around 2,700 odd crores. In yesterday's trading session, the market ended off highs primarily because of the weekly options expiry. Remember, yesterday afternoon we were talking about how there was a lot of action at the 18,850 call, and for a premium of 30 rupees, there could be resistance at 18,880, and yesterday's high was 18,878, so the market turned from there itself. FIs in the index futures unwound about 7,100 longs, also unwound around 1,350 shorts, but despite that, their long exposure still remains unchanged at around 75% mark. The good part, however, is now that the weekly options expiry is behind us, the put-call ratio, which was heated at around 1.55, has now come down to 1.26. In terms of options which are active for next week, a lot of call writers are pretty active at the 18,900 and the 19,000 mark itself for a premium of anywhere between 100 to 50 odd rupees. And at the lower levels, we are seeing a lot of put writing at 18,800 as well as 18,700. So what does this all mean for the next 1 week? Well, options for the next week do indicate that there could be congestion around that 18,900 to 19,000 mark, whereas at the same time, we are likely to see some support around 18,700 to 18,750 odd marks. So those are what the levels are indicating. For today, it looks like it'll be a lot more stock-specific day because the mid-cap index is still not hit a record high. So that is something that we'll be watching out for. Individual stocks will be more in focus than the index.
Yes, come back, and in its latest revision, the government has more than halved the windfall tax on crude oil to 4,900 rupees a ton from 10,200 rupees a ton. The export duty on diesel has also been cut to 8 rupees a litre from a little over 10 rupees per litre. The aviation duty is as is, and petrol duty remains nil. Moving on, the government is planning to exit NMDC steel plant Nagarnar via strategic sale. It has invited expressions of interest to sell over 50% stake, and the remaining stake will be offered to NMDC via a bidding process. Sapna Das is joining us and getting us more details on this one. Sapna.
Well, the government plans to exit Nagarnar stake completely. First, via selling its stake via strategic stake sale, offloading 51 odd percent, close to 51 odd percent to a strategic buyer. And in the second leg, it'll offer 10% of its residual stake in NSL to NMDC via the bidding process. Now the expressions of interest have finally been invited. This has been possible because because NSL has now been demerged completely from NMDC, and hence along with the strategic stake sale, the management control is also being offered. The bidder has to have a minimum net worth of 5,000 odd crores, and of course they can come in the form of consortia as well. In the second leg, the government will also offer the remaining 10% that will remain with it once the strategic buyer has been tied up. That will follow post that. So this is another set of EOI has been invited and another privatization being announced by the government. Now what will be the exact timelines, how will it flow, how much time it will take, how much the government will garner, that is something that will have to be seen over the next couple of months.
Yes, and we'll keep coming back to you for more details on this one. Sapna, thank you for joining us. Moving on, IT Ministry sources say the government is in the final stages of drafting the Digital India Bill. The ministry is likely to open the draft to public comments before the end of this year. The bill will subsume the existing Information Technology Act and may seek accountability from social media companies for algorithms deployed as well. Welcome back. You're watching Power Breakfast on CNBC-TV18. Well, we've discussed equity markets and a lot more. It's time to talk commodities now. Manisha Gupta is joining us with a take and an update on the commodity space. Hey, Manisha, good morning.
Hey, morning, Sonal. Thank you for that. Well, we are looking at choppy moves in crude oil prices ahead of the December meeting. The OPEC and allies are expected to cut production. If they do not, then you could be looking at some profit-taking coming back into the market. Overall, when you look at the OPEC output curves in the month of November, have just been at about 1 million barrels per day and not 2 million barrels that they had agreed. On this week, though, the crude oil prices are up by 7%. What the markets will look forward now is to the European Union on price cap on Russian oil. As of now, European Union has asked its 27 members to approve price cap at $60 a barrel and proposed a cap and adjustment mechanism to keep the prices 5% below the market prices. So there's lots that can be expected in the next 5-10 days when it comes to crude oil. Having said that, the weak U.S. manufacturing data is weighing onto the market, and so is the fact that China is signaling softening stance on COVID restrictions that perhaps is keeping the market supportive. It is a metal space, though, which continues to run on barrels, whether it's gold, silver, copper, nickel, aluminum. We've seen yet another day of gains into the market, anywhere between 1 to 2.5%. And all of these commodities are headed for a weekly gain as well.
Okay. All right, Manisha, thank you so much for that update. Manisha briefly mentioned China as well. So let's shift focus to China, where leaders have announced a new stage in the country's fight against COVID-19, potentially hinting at shifts in Beijing's zero-COVID policy, which sparked unrest last weekend. CNBC's Eunice Yoon filed us this report from Beijing.
Well, those comments were made about the new stage were made by China's top lockdown enforcer, the vice premier who's often referred to as Beijing's Lady of Lockdowns, had convened a meeting of health experts where she said that Omicron is less pathogenic and notably skipped using the term zero COVID. Now, all of this coincides with the state media today really downplaying the after effects of long COVID, which is something that Chinese people have been really concerned about after being barraged with the message for the past 3 years that COVID is extremely dangerous. We saw cities around the country dropping or at least easing somewhat their quarantine protocols. For example, in Chongqing and in Dongguan, two cities that are important for the global supply chain, both of them said that they will now allow the quarantine at home of some close contacts. And then here in Beijing, it isn't official yet, but local authorities have been telling residents that even some infected people can quarantine at home if they meet certain conditions instead of being taken away to government isolation facilities. And then there's been some progress made also in the city of Zhengzhou, which is often known as iPhone City. The Foxconn, the zone, the industrial park where Foxconn has that iPhone plant, said that they are also going to be easing measures as of today. So obviously a signal there by Beijing, but we still don't know about the timing and the pacing of any type of easing.
Okay, so any official updates from China is something that will be important for global markets as well. With that, we'll get you the latest on the Russia-Ukraine war. US President Joe Biden and French President Emmanuel Macron, in a joint press conference at the White House, reaffirmed their commitment to support Ukraine. President Biden also said he would be willing to speak to Russian President Putin if he's genuinely interested in ending the war. Listen in.
I'm prepared to speak with Mr. Putin if, in fact, there is an interest in him deciding he's looking for a way to end the war. He hasn't done that yet. If that's the case, in consultation with my French and my NATO friends, I'll be happy to sit down with Putin to see what he has in mind.
Okay, that is the word coming on from the US President Joe Biden. And with that, it's a wrap on this edition of Power Breakfast with the news that the SGX Nifty is indicating a weak start for our own market. Stay tuned. Bazaar Morning Call will take up all the action next.